So thank you. So Evan, thank you very much for coming this evening. Let me give a brief introduction of Evan's background. Evan is somebody who grew up in New York. He actually went to college but chose not to graduate and did a number of other jobs, which we're going to talk about. So he's risen up. How many people here don't have a college degree? Okay. All right, one. Okay, two. All right, so he's managed to achieve the heights that I'm going to talk about without a college degree, so you might think about whether your college degree was worth it when you hear what he's done. He spent
what I could have done if I had one.
Right. 25 years at AIG and rose up to be the president and chief operating officer, and then left. 2001, he joined a company, insurance company called ACE, which then was based in, I guess, the Cayman Islands, and ultimately later in Switzerland. And then in 2004, he became the chairman and CEO of it. And he's been the chairman and CEO of it since then. He bought another company called Chubb, and ACE bought Chubb, but they used the Chubb name. And since the time that he became the chairman and CEO of ACE in 2004 till today, the market value of this combined company has gone up from $11 billion to roughly $64 billion, which is pretty good. Company has 31,000 employees.
It's still cheap, so I would buy.
And I guess it's the largest publicly traded pure property and casualty insurer. Evan, in addition to doing that, has a number of outside interests. We'll talk about some of them in a moment, but he is on the board of Rockefeller University. He's also the chairman of the U.S.-China Business Council and been very actively involved there, and involved with a number of other philanthropic things that we'll talk about in a moment. So Evan, let me ask you a question. I hate to bring in my personal situation in these things, but I have a house I've lived in for about 30 years, and the pipe burst recently, and the entire basement was flooded. And so Chubb has been my insurer for everything I have. I never collected anything. I paid a lot of things.
It's perfect.
I've never asked for any money back. I never got any money back. So I'm going to ask for them back. And you know, I didn't tell you that you got it there when you. Well, I don't know if you have enough because the guy had kept my.
How about 20?
Well, that's
we
good.
start with that.
Well, see, I didn't tell you. I kept my copy of the Magna Carta in the basement. Yeah. Your insurance adjuster doesn't believe it, but actually, I've had no problems. I'm happy. I was going to invite the insurance adjuster here tonight to just make sure that he knew that I knew the boss, and so maybe he could, hurry up the check. But anyway, you told me when I talked to you about this actually before when we were in China, that a lot of people are having problems with their pipes bursting because homes are older and so forth. And you said there's a way to deal with that. What is that?
It's I can't believe we're going to have this conversation.
Right.
It's an automatic water shutoff valve.
Okay.
And the part that's not so humorous is it's true that there has been over the last couple of years, and it persists, a problem of flooding in homes not due to weather, and that's pipes bursting, and that's because so much of the housing stock was renovated 20, 25 years ago, and it's aging. And at the same time, people went to more open floor plans, and they moved things like washers and dryers upstairs, all these things you don't want to know. Right. So there's a lot of flooding. And a way to eliminate that problem is automatic water shutoff valve. And so when we pay your claim, we insist you put one in.
All right.
And if you have the Magna Carta, your policy is going to sit on my desk.
Okay. So how many people here have that kind of thing in their house, that water adjuster? Anybody? Okay. And
you're who I want to insure.
Are the rates lower if people have that?
They are.
They are lower. Okay. So on a very serious note, not that wasn't serious, but
it was a little trivial.
Climate change is a serious problem for property and casualty people because of climate change, many people would say, produces more hurricanes, more storms, tornadoes, and so forth. How do you deal with the effects of climate change, and what do you think, as an insurer, you can realistically do to mitigate the effects of climate change?
Yeah, and climate change with warming of oceans and rising of sea levels, much more extreme weather that we've been able to observe. It's not a fiction. It's not speculative. It's a fact, and it's heat. It's, it's wildfire, droughts, heat, flooding, hurricanes are more intense. And for certain kinds of perils, we have, because of sciences, because of technology, because of data, the ability to model these events and to imagine damageability rates on concentrations of exposure. The sciences have improved with that, and so we can insure those. Other kinds, the science is just evolving, wildfires and flooding. But you know, we're in that business. It's a no-tears business. At the same time, society is changing. It's urbanizing. And so you have concentrations of population and people wanting to live in areas where they have no business living. And so when you see the kind of wildfire events that occur, they're with people living closer into wilderness areas that are more exposed. Right. And so you really have the changing of society's behaviors and climate at the same time.
The big fire in California of a few months ago, I assume you didn't make any money on that.
No, I didn't make any money on that.
Because that's...
That wasn't a profit-making event.
Right,
that was a
right.
pay-it-out event.
Now, for people who are not familiar with the insurance business, and I can't say I'm an expert, but I understand there are basically three types of insurers. There's life insurers, health insurers, and property and casualty. Is that more or less right?
Correct.
And which of those is actually the bigger of industry? Is it the life insurance industry, the health insurance industry, or property and casualty?
Globally, it's the life insurance industry and the property casualty industry.
Okay.
Life insurance is the largest.
And the way the insurance industry works essentially is people want to insure against risk. They pay a premium to get that insurance. And then you have made a calculation that you're likely to make some profit on that premium. But then you take the money that you have from the premium and you invest it. And you try to make money on both. Is that right? The insurance and also the investment. Is that
correct?
And if you're an insurance company that doesn't make money on the premiums, then you're not in good shape if you're only making money on investments.
Correct.
And today, when somebody wants to get insurance from you, let's say I have a house, I want to insure it, you have a wealth of algorithms about what it's likely to be in terms of damage, fire damage, flood damage, whatever. And your experience in that is pretty good after many years, I assume. So you rarely lose money overall on the premiums. Is that right?
Yeah. So we would call that a combined ratio. That for every dollar we collect, what percentage do we pay out in expenses and in losses? And Chubb pays out roughly in total about 88 cents on the dollar. We make about 11 or 12 in underwriting, and by far, we are the most profitable consistently, year in and year out in the business.
So, and by the way, when Ace bought Chubb, why did you use the name Chubb? Since Ace bought Chubb, why don't you call it Ace?
Because the name Ace is a name that I was looking to change. Oh. It is a non-distinctive name. There's Ace Tree Company, Ace Hardware, who I thought we might do joint marketing with. Right. There is Ace Food Company. There's Ace everything. Nothing distinctive about that. Chubb was a brand, and so it was a good reason to.
Okay. The most common type of property and casualty insurance, is that home?
In the personal lines area, it'd be home or automobile, and then the commercial area, it would be all kinds of liability and property insurance.
Okay, so when you insure somebody, you have your calculations about what it's likely to be, and generally you're going to be right. But when artificial intelligence comes in, and it's more to the fore than maybe today, would it help you even make better calculations about what the risk is?
Yeah, artificial intelligence is I think there's a lot of hype around it. I think the promise, the real reality of it is still in the future. But our ability to use data, our own data and external data, and use analytic tools, and more powerful analytic tools, that's with us right now, and that helps us to gain better insight into risk cohorts and the features around risk and discern one versus the other.
So if I buy a house and I say, all right, I want to get insurance, and I have several possibilities, what is the argument that Chubb would make that why they should be selected? Is it that you pay at a higher ratio, you pay it out more quickly, you're nicer? What is it that you tell people is the reason they should use Chubb?
Better looking.
Better looking, okay.
I would think that.
Better looking is a factor, sure.
Yeah. First of all, what's clear when you buy a policy from Chubb, the richness of the coverage is unmatched by any other company, and you pay for that. And the level of the service that you get is higher than any other. Our satisfaction rate with customers is 97%.
Well, I hope I'll be 98% when I
Well,
get
there
my
you go.
claim paid. But, which I'm actually, they say they are paying.
I know you're worried about this. We're
Well,
going to pay your claim.
no, it's in good shape. But you're not saying you're the low-cost spread. You're saying we're going to give you better coverage, and you pay for better coverage.
Exactly right. In fact, we don't sell price. We sell coverage and service, and it's a storied brand and a storied reputation, and factually earned, well earned.
Now, a new area of insurance that I think you've been involved with is cyber insurance.
Correct.
And there recently was an article by Warren Buffett being quoted as saying it's hard to figure out how to price cyber insurance. You've said, I disagree with Warren.
He graduated college. I didn't.
Well, but you think cyber is a big growing area, right?
I do. The world is moving from, look, what is our job is in insurance? We're a reflection of social activity, economic activity, of society's activities broadly, because those activities create exposure. And when they do, if we're going to remain relevant, we have to find ways of helping to mitigate those exposures for people. As the world moves from analog to digital, then cyber exposure is something that people are exposed to, whether it's businesses or individuals. And so that is an area that we have been pioneering for a number of years, and it's a fast-growing area, and we think we do it pretty well.
Now, when I buy insurance for homes or things like that, I usually have a broker who is, the broker on that. Right. What is the role of the insurance broker?
The broker is there to advise you, to look at your exposures and determine what is the right kind of coverages for you, and select the insurance company and the policies, and at the right price and at the right terms that would best meet that for you. They represent you and negotiate with the insurance company.
Now, are there people who just self-insure their homes? Is that a large percentage of people? Very rarely are people self-insure?
It's a small percentage that self-insure. I mean, you can do it, and
when somebody says that, does that really mean they're putting money aside each month, or they're really not?
No, they're not putting anything aside generally. If you have a mortgage, you're required to buy insurance to protect the mortgage, to protect the bank. But beyond that, if you don't have one, you're free to self-insure.
And Warren Buffett, who has a big insurance business as well, he's often said it's a great business because you get the money up front, you have the float, and you can invest it. Right. So when you invest the money that you get, what type of return are you overall looking at? How risky can your investments be?
We have a different, we're not Warren Buffett as far as an investing genius. So we look at it a little differently. We make money, first of all, on the underwriting side, and we make more than anybody else does in that business. We're highly levered against exposure, our capital against exposure when we insure. Therefore, on the asset side, when we invest, we're very conservative, because that's policyholders claim money, and that's our own capital. And so we invest fundamentally in fixed income and fixed income returns, and we'll make against capital around a 15% return.
What about
on that part? And on the underwriting, we make about an equal amount, 12 to 15%.
Have you thought about investing in private equity?
Yeah, we do some. Yes, we do.
Not enough, probably, but okay.
Well, about 10% of our portfolio.
Okay. So let me talk a little. I made a reference earlier, and you said it was okay to talk about this, your background, because it's a little unusual. People who are in the corporate suites usually by now have college degrees and MBAs, PhDs, law degrees, and so forth. So when you graduated from high school, did you just say, I didn't really want to go to college, or what did you do for the couple years that you might have been in college?
Yeah, I grew up in the late 60s, early 70s. I was a product of that generation.
Your hair was longer?
I had hair. Right. I got into Middlebury College and took a year's deferment, and a year turned into 3 years. I wandered around the U.S. I worked in a shrimp boat off the coast of Florida. I worked as a short order cook in Georgia. I worked in the oil fields in Wyoming, and then I ended up cooking in a nursing home, the Park Avenue Baptist Nursing Home in Denver, Colorado, and I was apprenticing a chef at night. And I got tired of, then I was 20 years old. I got tired of not using my brain and actually wearing kind of lousy clothes. And so that's when I went to try the insurance business.
And when you were in the Baptist nursing home, were you the only Greenberg working there?
I can guarantee I was.
Yes.
I can guarantee you no one in that nursing home was a Greenberg.
Right. And as a short order cook or a long order cook, are you a cook now? Do you still cook, or you given that up?
If I'm forced to, I do. It's a good survival skill.
So I mentioned earlier that you are the chair of the U.S.-China Business Council.
Right.
And what is your assessment of the likelihood of our getting a trade agreement with China, and do you think it will be advantageous to the United States?
First of all, I think that we will reach an agreement. I think the odds are in that favor. I think it's in both countries' interests, and I think both countries need to find a way, in spite of the differences of our cultures and our values and our systems, to find a way to accommodate each other and each other's interests. And I think we will find a way that way. I think the agreement that since Bob Lighthizer, the USTR, is negotiating it, I think he is negotiating for substance and for structural change that frankly is in China's own interest and is in keeping with China's own stated reforms that since the 18th Party Congress they have had on the agenda to implement and have talked and hasn't been implemented. And I think the pressure of the trade negotiation is outside pressure that is helping China to move along and to embrace some of those reforms. So I'm hopeful.
So your biggest book of business in insurance is in the United States, but second biggest is China?
No. Second biggest would be the UK and then Mexico. But Asia and Latin America are very large for us. They represent 20% of our business. And China is a fast-growing business for us.
And today, when you're running your company, are you going out meeting potential customers? Are you checking with your employees and the brokers? How's your typical day or a typical week for you?
I spend most of my time working on strategy and execution of strategy. Strategy is 10% of the action. Execution is 90%. And we're doing it across 55 countries in 500 different product areas and customer cohorts that go from small business to large industrial commercial, and then on the consumer side from people who buy $50 a year policies from us in Indonesia to those who buy high net worth insurance in the United States. So it's a very broad portfolio, and the strategies for distribution, for underwriting, for administration of all that is, it's very dynamic, and there's a lot of opportunity. So I'm working to continue to grow that.
Not necessarily your company, but generally some people have the view that insurance companies don't like to pay out claims that much. You may have heard this reputation that some have. Why do you think that reputation arose at some point?
Insurance companies pay out roughly 65 to 70 cents on the dollar they collect in claims. I mean, that's just the statistical fact. And then the rest is in expenses and profit. Most insurance companies earn somewhere between 2 cents and 5 cents of profit on the dollar they collect. As I said, we earn about 11 cents. So the reputation for not paying claims there, the fact is they pay claims.
So there's an insurance company.
Some do it better than others, and I would recommend Chubb.
One company in London, Lloyd's of London, has been around for a long time, and they are famous for insuring exotic things or things that maybe other people don't insure. Is that a fair assessment of them, or they do the same kind of things you do, not just exotic things?
They do the same kind of things we do. They compete broadly across the globe with us in particularly in the specialty areas, and but they do traditional areas as well.
So like recently, for example, we talked about this earlier, Mick Jagger canceled or postponed his tour.
Right.
And because he needed some heart valve. So that presumably they had insurance against that because they had, I guess, booked the thing. Now, would that be the kind of thing you would do in your company? Would you have provided insurance for Mick Jagger's tour, or something Lloyd's of London would do, or?
We would have done it, or Lloyd's would have done it. We did not do Mick Jagger, but we would do that, yes.
Okay, and do people come to you all the time with exotic kind of things that nobody knows how to insure because it hasn't happened before? And is that kept to your level, or somebody lower than you?
Yeah, we get a pretty steady stream of sort of one-off, unusual circumstances or things to insure, and some of them, if they're of consequence, they'll make it up to my desk.
Now, you do automobile insurance?
In some countries.
And would you
Some in the U.S. We're the third largest insurer of autos in Mexico, as an example.
But what about when automated or driverless cars come along? Do you think that'll be a plus for your business or a minus for the automobile insurance?
I think for the auto business, it'll be a minus because it's going to become a product liability coverage. The manufacturer will have liability because of the mechanical working of the car, and if it fails to perform, that's a failure of the product, and it'll be product liability insurance. And we happen to be one of the 2-3 largest writers of that in the world.
And now some people have a view that insurance salesmen are, very aggressive. I guess all salesmen are aggressive. So if you're an insurance salesman, you're trying to sell.
Well, they get a bad rap.
Well,
This
it's
industry gets
unfair,
a terrible
right?
rap. It really.
But they're not any more aggressive than anybody selling anything else, you'd say?
Yeah, I think maybe less aggressive than people selling some other
Like when you need insurance, who sells it to you? You go to Chubb, or you kind of somebody must tell you what's available.
I do eat my own cooking, and so Chubb does insure me. And by the way, they get great pleasure out of giving me no discount and providing me a full bill and see what I will do.
Do you ever make any claims? Or did that
I've never had a claim.
You never had a claim?
No. And my premiums, like yours, go up every year, and I wonder why.
Right. Wow. You should check with the CEO of that company.
I know. It's a mystery.
Now, you have a pretty good picture on the U.S. economy because you're insuring so many things.
Yeah.
What is your view on the U.S. economy now?
I think the U.S. economy is in good shape, and I think it's a very broad-based.
Hey?
I think we're enjoying broad-based growth in the U.S. economy. I think part of the risk right now is the global economy that's slowing down, and the greatest risk against global growth and prosperity is political. In my judgment, when I look at any region of the world or a major country, the biggest threat to their economic health right now is political and political decision.
So, you insure a fair bit in the UK.
Yeah.
So, if somebody says today they want to buy a house and they want insurance against it, is it more expensive or less expensive because of Brexit? Or
No, it doesn't.
doesn't make a difference.
No.
And
I'd like to insure it in dollars because in pounds it becomes a lower exposure if I'm paying out in pounds. So
Okay.
pay me in dollars and I'll insure you in pounds.
now, when you're not insuring something, you must take some time to relax and exercise. So, you look like you're pretty fit. Do you exercise a lot?
Yeah, every day. It's my drug of choice.
Okay, so every day. How much? A half hour?
I do about an hour of cardio and fitness type work. I do a couple of hours of yoga a week. I ride horses. I ski a lot, and then I do find time to work.
And so, gee, I'd like to be the guy selling you health insurance because you wouldn't.
Yeah.
You're in pretty good shape.
Yeah.
So do you think it's important for your ability to do what you're doing by being in good shape and exercising an hour a day, and you cut out something else to make that time available?
No, I get up, I get up at 5 a.m. and read a couple of papers, and then generally exercise, for an hour before, going to work.
In the insurance business, what do you think is the biggest misconception of the insurance business? The things that I was asking you about, that they don't pay the claims or whatever. What is the biggest misconception?
I think the biggest misconception is that people think somehow it's a boring, staid business, when it's actually extremely dynamic, very, very competitive, and a very interesting business because, as I said earlier, it's a reflection of society and cultures, because what we do is take exposures. And when you look at the changing trends of society, whether it's due to science or it's due to nature, or it's due to law or social norms, that's constantly changing exposures, and that's what we're in the business of trying to mitigate and transfer for people. So it's actually a very fascinating business. It's highly competitive, highly dynamic. Capital can move in and out of it freely. Barriers to entry are not that high.
So let's talk about the competition. Let's say in New York, for example, there's a new development called the Hudson Yards.
Yes.
And so presumably...
We were the insurer of Hudson Yards.
All right, well, I was going to ask you, that would take a lot of, I guess, a big premium to get that insurance, but you would say a modest premium probably. But,
Of course, modest.
But like to get that business...
It's proper to the risk.
All right, but to get that business, presumably they went to a couple insurance companies, and would it come to your desk what the price is, the premium they'd have to pay, or would that be well below?
No, that would not have hit my desk, but I subsequently aware and looked at it and went to meet with Steve Ross on it, and who thought that we ought to become a tenant then of course, of Hudson Yards, because we were the insurer.
So you're a tenant?
No, I'm not.
Oh, okay.
We had the discussion.
But do you ever get things coming to your desk for big insurance things where you have to make the assessment of the premium or the risk, or that really gets decided below you?
Generally, things will come to my desk when they're outside. We, as you can imagine, in an organization like this, we set up risk guidelines and an appetite for how much risk we'll take, what kind of risk. And when it steps outside of those guidelines, and if it's of a consequence, then I'm going to see it.
Okay. Now, in terms of your outside activities, again, and in terms of philanthropy, what are you most interested in your philanthropic interests? You obviously have done well financially, so you must have some money that you're giving away somewhere. What are your biggest interests?
Well, Rockefeller University sits at top of my list because that's, biomedicine, and I think to help improve the quality of life for people, important. Nature Conservancy and that end. On the education side, Teach for All, which is the international arm of Teach for America, and the IRC, International Rescue Committee, and God knows we have a refugee problem, and there is no cohort of society, of humanity, that is more at risk than refugees are. And whether it's those coming to our own borders or those around the world, there's over 100 million refugees today. And so, I feel pretty strongly about supporting that.
So you've reached the peak of the business world, in a sense. You're running a very, very successful company, but suppose the chance came along to serve your country in government. Would you ever be interested in moving to Washington and being a cabinet officer or something like that?
No. I am deeply patriotic. I absolutely and am involved to serve my country and care about my country. But there are many ways to do that, and I'd rather not do it in government, particularly now.
Well, did you know Donald Trump before he was president?
From a distance.
Okay.
And business.
business, so you were an insurer to some extent, maybe of some of his businesses from time to time. He's a profitable account.
Please don't go down this road too far.
Okay, so the insurance business, you could say, is, has been something you've more or less in your blood, because your father's a very prominent insurance person. He was for many, many years running AIG. When you were growing up, did insurance get talked out of the dinner table, or did you kind of breathe insurance when you were growing up, or you kind of didn't really talk about it that much at home?
No one talked to me about it as a kid, but I grew up around it, and so by osmosis, I heard it all the time, and would travel as a child with my parents and would be exposed to it, just generally, but not.
Okay, so today, as you look at your business, where are the areas of growth for someone like Chubb? Where can you grow? There are new areas that you might want to take your company into?
First, geographically, Asia and Latin America are the fastest growing areas. Latin America, obviously, much smaller as an opportunity, but it's vast. And Asia is enormous opportunity, and that's where our fastest growing businesses are. The United States is fast growing, and now we have been in China for many years. I've been doing business there since the early 90s, and we have been there as a company since 2000. We were just granted by the Chinese, we've owned 20%, and we're the largest shareholder of a financial services holding company in China that holds a property casualty, a life company, and an asset management. We were just given permission to convert that company from a Chinese company to a foreign invested, which is the path that we're now granted to take 100% ownership of that. And that's the first time that's been done. And it has 600 offices and 11 million customers. So for China, it's small. But that maybe is, that country, if it remains stable, which I believe it will maybe be the greatest opportunity for us over the next 10 or 15 years.
What about India? Anything in India, or is that?
No, we don't, because India is very hostile in financial services and insurance in particular. You can't own more than 24%, now 49% of a company, but you're not allowed to run it and manage it. You have to sit in the back seat. And I don't think that's a formula for making money.
Okay. What about Africa? You're there?
Yes, we are in Africa selectively. They're very small markets, very micro market, and it's not a great opportunity, but in certain select areas we're doing business.
So if I was a private equity investor and I wanted to invest in the insurance industry, what kind of company would you say? The life insurance industry be better, the property and casualty, the health insurance? Where would I wisely put my money?
Given that you would have probably a 5 to 7 year hold period, I wouldn't advise life insurance. I would tell you property casualty.
Okay.
I'd tell you probably invest in a reinsurer that's behind Chubb, and I'll make you some money.
Okay. So for those who may not be experts in insurance, what does a reinsurer do?
A reinsurer is an insurance company's insurance company.
So why do you?
We spread the risk to them.
Why do you spread the risk? If it's a good risk, you already took the premium, why would you need to spread it?
You take exposures to the extent of your balance sheet wherewithal. We accumulate a great deal of exposures either on an individual risk. We might insure something for $1 billion, and I'm not going to retain $1 billion on my balance sheet and have that loss. So you would spread it that way, or it's a class of business that has a certain volatility signature, and you want to smooth out the profit and loss of the business. So you buy reinsurance for those purposes.
Now, back to my own personal situation. I have a home in Nantucket.
It's always about me, isn't it?
Right, of course. I have a home in Nantucket. I've been buying from Chubb for a long time, I think, flood insurance, right?
Yeah.
You sell that?
Yeah.
But I've never collected anything on it because we don't have any floods. But is flood insurance a very profitable business? Because there are not that many floods really in Nantucket.
I have a house in Nantucket, and I have it insured for flood insurance also.
Really?
I haven't had a claim yet either.
Right. Okay. Well, you're probably near the same neighborhood as me.
But and I'm insuring, and I'm insuring you there. I'm insuring me there too.
Okay. Well, I was looking at some.
One day we'll have a bad day in Nantucket.
What do you think about people? I was looking at a house in Florida this past weekend, right on the water, right on the ocean. Do you think houses right on the ocean are good risks, or
They're a
no?
they're a good risk. There's a price for every risk.
Okay.
We can make a deal.
All right. Well, I'll talk to you later.
Yeah.
So, what is the greatest thrill of your business career, would you say? Taking a company from modest beginning to the heights of the property and casualty industry, doing this from a modest background in terms of your education. What would you say is the greatest thrill that you've had?
It's building. I'm a builder. And I have a community of colleagues I work with we've been together many years, and we get a lot of satisfaction. This is not a short-term business. This is not a business that if you want to make money quickly, this is the business you go into. You do it over a long period of time. And so you have to really enjoy the building and the creating. And this is our medium to create with. And we look back and the satisfaction, which is for a nanosecond out of what we built, and then it's on to the next.
Well, as you assess risks, I mean, you told me you're a horseback rider, dressage. So isn't that kind of risky? Can you fall off a horse, or a horse can fall on you? Is that a big risk?
There's odds.
Have you ever fallen off a horse? Or
Yeah, I've fallen off a horse.
can you get insurance for that, or no, I guess not?
I don't think it helps you.
Okay, it doesn't help. And like you're a skier, you're an active skier, and
I am.
is that risky or not so much?
Yeah, it's probably a little risky.
Okay.
Insurance isn't going to help you with that either.
So today, you don't want to go into government, and you want to stay where you are, presumably for quite a while. You're obviously in good shape, so you intend to do this for another 20 years, 15, 10?
My dad's 94 and goes to work every day.
That's true.
I'm not doing that.
Well, you know, he plays tennis. He's in pretty good shape. So, yeah, but you have pretty good genes. Your mother is still in
90.
very good shape.
My mother is 90, and she skied till 3 years ago.
Oh. And for those who don't know, his father, Hank Greenberg, he is well known in the insurance business, but he was on the landing group, I think, when Normandy occurred.
He was.
You know, he went off on the boats on Normandy at, I guess, Omaha Beach? Or?
He was in Omaha Beach, Dog Red, on D-Day.
Wow. Okay. So I guess you couldn't get insurance for that, right? No insurance for that.
17-year-old kid, and I'm glad nothing happened to him.
Wow.
Because I wouldn't be here.
Well, you've built an incredible company. Thank you for your time, and thank you for you know, paying I assume my flood damage soon, or not my flood damage, my damage I'm going to get I have in my house, which I assume the insurance adjuster will see the tape of this and will quickly pay the amount of money that I'm owed. All right, thank you. Thanks very much.